All right. Good morning, everybody, and happy Monday. It's been a very, very busy 24 hour, or 12, actually 12 hours, I should say already. So let's get started here in just a second. As usual, if you can just quickly confirm the audio and visual, that would be amazing. And then we are going to get started here in just a second. All right. Okay, perfect. Let's get started. Good morning, everybody. Serge Berger here from thestudytrader.com. This is our Set the Market morning call. If you are here for the first time, what we are doing is we're going to spend the next 10 to 15 minutes. Today, it'll probably be closer to 15 minutes at least, going over the top things on my notepad. And it's a lot of things this morning, as you can imagine. If you are a trade ops member, which I would encourage you to be because you would already be in the know and already had a couple of trades to do, make sure you get in there. I'll give you guys a link later on as well. But everything I'm about to go through, we've already told people. I'm not going to go through everything here because it's a lot, but I'm going to give you a couple of things here to get started since this is a public venue. So let's get started. I guess first of all, what's probably important to realize is the level of fear that we have right now. And I guess the best way to kind of show you that is that essentially, the 3-day decline that we've now had or are witnessing, which would include today. Remember, futures were much lower earlier this morning. We were as much as another 3.5% lower earlier this morning than we are right now. So whether that gets retested or not, we shall see. I do think we might be reaching a low here from a trading perspective. I think ultimately stocks do go lower, but I think we're getting very fearful here in the very, very, very near term. So I wouldn't be surprised if some algos come in and start to bounce the market a bit. That would be, and it doesn't have to be today's business. This could happen later on this week. We'll have to see. So it's very much in flux, which is exactly why we need a rules-based approach, and that's why our momentum indicator is such a great tool to have, or the vertical X approach, I should say, right now, because it keeps the emotions out and it gives us high-quality signals without having to do guesswork or listen to someone on TV or something like that. So essentially what we're having right now in terms of fear is we have the largest fear, which is larger than COVID and larger than the financial crisis, except for 1987. So this is the largest amount of fear we've seen as measured by the actual move. I'll show you the VIX in a minute, but this is one way of looking at it. And so what you can see here, this is essentially the rate of change all the way. I found this on the internet. I think it's from Bespoke. Great stuff. 1953 to 2025. So that's quite a bit of history. And you can see outside of the 1987 crash, this is the largest sort of price movement we're seeing in such a short amount of time. And that's significant, right? And so basically what it means is that, in an algo-driven world, which is what I've been warning about, and I hope you guys have been heeding this call. I've been warning about that when you have this passive investing bubble and we live in a gambling bubble, don't make no mistake about it. The algos can change. And when everyone's in the same trade, and I think some people are now starting to realize what we were saying after all, it can really sting and you can have these crazy moves. Having said, and this is why I think ultimately this goes lower, because there's, by the way, not that many people have sold stocks yet. I mean, just so you know, everyone's still holding out. The amount of questions I still get about is the bottom in, is it time to buy more? As long as you have that mentality, the bottom's not in. High probability it's not in. Now, can we get a trading bounce? Absolutely, we can get a trading bounce. If that's today or tomorrow or this week or next week, I don't know. But I think we're close to that. Now, one chart that I think is worth mentioning is where's the VIX right now? And so the VIX is just one way of looking at things, but here's kind of a long-term look at the VIX, and I showed this to a whole bunch of people over the weekend. And so typically speaking, when you get towards sort of the 45 to 60 area, there is a maximum fear being priced in. That does not mean that prices can't go lower, but it does have a high probability of ultimately seeing, VIX, the fears start to kind of peak out for at least a short while. And so I think this to me, is an opportunity to maybe, through the lens of possibly a few days, maybe a couple of weeks, I would imagine that fear could come down a little bit. But again, I wouldn't be going in here and just buying with both hands, because the buy the dip mentality is largely still present. And as long as that's present, remember, most people have not seen a cycle. Most people have been in the market for 10 to 15 years. The people that are on Wall Street and most people at home, and I say most, obviously there's a lot more people than, that a lot of people that have been in the market for a long time. But for the most part, the people that are the loudest have never seen a cycle. So they are in this buy the dip mentality, which is why I think a lot of people are going to lose about 30% of their net worth going forward here because of that mentality. And so and so that's the issue we have. Now, what about sort of individual stocks? Now, again, if you look at individual stocks, you look at, say, Apple, which is obviously a big, important name. I think we're getting to a point here, too, where a bounce could occur. And I'm really looking at this being sort of a 200-day moving average thing, which is an oversimplification, but the algorithms will look for those levels. So let me see where Apple's trading pre-market, but Apple pre-market, it was down as much as 175. So if I look at 175, that's actually right near the 200-day moving average. That's his red line. And so the red line, as you can see, has been, for the most part, except for the great financial crisis, something where the stock has kind of found some support. Is it going to find ultimate support there and be a generational buy? I don't think so. But could it bounce? That's entirely possible, right? So trading versus investing is sort of the two time frames here. Russell 2000, that's another one that I want to touch on a little bit. So the Russell 2000, and I showed this yesterday, let me quickly show you this one too, is at a level that I think is getting interesting. So this is the Russell 2000. You can peel the chart back all the way back to 2021, and you can see the Russell 2000 is now at the same level it was in like summer of 2021. So I think it's a logical spot in it, and it might slice through here for a bit, but I think somewhere here, and that's why we want to use the trender. The trender will tell us not only our process not only tells us when something's going to be extremely oversold, but also when there's new momentum to the upside, right? And so that's our sort of two-pronged process along understanding the broader trends, which have all now broken, by the way. So that's why we think there's going to be lower prices through a multi-month lens, but in the near term, potentially some bounces. The Russell 2000, another interesting spot to look at. What else? We talked about the VIX. We talked about the Russell 2000. Let me quickly see. There was a whole bunch of other stuff I wanted to go through. Oh, the NASDAQ 100. That's another one. So I'm going to use the futures here just because the QQQ and the NASDAQ 100 are obviously not yet trading. But for everyone that was screaming how amazing NVIDIA is, I will just remind everyone, and I know people don't like to hear this, but at the end of the day, what we're doing here is keeping emotions out of our process. The Russell 2000, the NASDAQ 100 is now back to where it was in late 2021. So this entire bubble that we blew last year, which is what I thought was just unbelievable, it's now basically erased. So just to put this into perspective, it took us, so pretty much all year, it took us, I'm going to say 13 months to blow that bubble, and it's now taken us about 1 month, maybe 1.5 months to erase a 13-month bubble. Does that make sense to you guys? That's why I'm always so concerned about mean reversion, because, the amount of sort of messages and borderline hate mail that we received telling people that this is not sustainable was just giving us more and more conviction. And of course, 13 months to the upside takes 1.5 months to resolve. That's the issue. And I think that's what a lot of people still have to learn, both about keeping your money, protecting your money, and then actually being able to make money. So a lot of people have a lot of learning here to do, and that's why we're really trying our very best to educate people here in real time. If there's any stocks you guys want to look at, please let me know. But these are some of the things that I want to go through. Now, over the past week, I believe it's about $5 trillion that was erased in U.S. stocks. So this move to the downside here, this is just the NASDAQ 100, of course, it's more broad than just the NASDAQ, but that's $5 trillion of wealth erased after everyone chart-chased higher. There is famous TV personalities that made a, I don't want to mention names here publicly because it ends up being a bit of an issue, but you guys know the guy that wheel out every time the market has an uptick, that basically was calling for small cap breakouts right there. The Russell 2000 is now down 30% in a straight line, right? Like a straight line. That's not little. That's a lot. So again, we're in a different environment right now. V-shaped reversals back to all-time highs. I think we can forget that. The S&P 500 is likely going to go sideways, we think, for 5 years. That does not mean it has to crash a whole lot more from here, but it's probably not going to make money, is our guess. Energy, material stocks, our absolute favorites going forward. We have to get through this de-levering here a bit. But after that, once we start getting past that, I think we're going to have basically the portfolio that's worked for the past 10 years. You have to scratch it. It's a very different portfolio now. We've been telling people about this for 2 years. No one really listened. We have a few people that are listening now that have been listening for the past 6 months, 3 months, 2 months, 1 month, and last week. But it's still few and far between. A lot of people are going to lose a lot of money. So I would encourage you to kind of be open to a different kind of market than what you've been used to. Are there any individual stocks you guys want to look at? Are there any questions, or are you all set? I just want to make sure we cover everything that you want. Now, what we're going to be focusing on here very closely is the rate of change in momentum as the market goes through this very, very volatile period. What we need from a trading perspective is we need to have an understanding of where is the point when momentum changes. And for that, we use the TSD Trender indicator. That's what we use. Also, one of the indicators we use inside the TradeOps chat room. But you need to have a process. If all you're doing is listening to your neighbor or some guy in CNBC that tells you how great the buying opportunity is, we have a very volatile market. To kind of put this into perspective, the SPY currently is expected. I wrote this yesterday. Let me quickly see. So give me 1 second. Let me find this. The S&P 500 is expected to move. Let me find I found it yesterday. It's expected to move about 144 points. So the SPX. So 144 points. It's called 145 points. Is supposed to be the average sort of daily move this week, right? So this is a very different environment. That's why trading here is so lucrative. So 145 points is, from current levels, let's call that's about not quite 3%, right? So the average daily move for the S&P 500 here for this week is meant to be about 3% intraday. That's unbelievable, right? And so what that means from a trading perspective also is it means that you need to reduce position size, right? I can't give you advice here, but if you're trading or investing the same position size that you do in a environment where the VIX is 15, but the VIX is now 65 or 60 or 50 or whatever it is right now, like that's a very different environment. So that's what we try to make clear to people. Then Bob wants to look at Amazon. So let's see. Well, the question, I guess I don't know what the question is, Bob, really. Like, are you thinking of buying, selling? What's your concern? What I will tell you is that Amazon's essentially turned into more of a consumer staple stock. From a trade, the only thing I can really tell you is I'm going to be using our momentum indicator and the Vertical X Pro for finding when it's extremely oversold. In the big picture, I still think the stock can go plenty lower. It really depends. The trends are starting to have actually broken on all those stocks, right? So if you think it's a long-term, viable investment that you believe in, sure. But what I think a lot of people are doing here is they're still buying the dip mode, and they like to look at these lines. I think a trade could make sense. I personally wouldn't be ready to commit capital here to most of these things just yet. I think there's too much uncertainty. Wall Street hates uncertainty. And again, the number one thing I keep talking about is most people are levered long the same stocks. That includes Amazon. And as they have to rebalance and de-lever, there's so much money in those few stocks that it can go a lot longer than people think. It took 10 years to get everyone into these stocks. Do you really think it's going to be over in a week? Of course not, right? I've been talking about publicly, and you guys know this, since May of last year, no more April of last year, that I saw, and I mentioned it every single day, pension funds and family office rebalance, i.e. sell some of their Mag 7 stocks. And they did it all last year starting in the second quarter. No one cared, no one listened. And this is what happens when they start to accelerate that selling, because now everyone else has realized it, right? Last one quickly for Harry, Tesla. Again, I don't know what the question is specifically. What I can tell you, Tesla is an extremely difficult stock to actually trade. Some people find comfort here that there's a simple line here. I personally would use the TSD Trender indicator. It's our momentum indicator. This is a momentum stock. I don't have a whole lot to say about this other than the fact that I think the stock could still go plenty lower from a swing trading perspective. But I would be very mindful here of this remaining very choppy. So if you're trying to be a hero and go in here and buy stocks because that's worked for you for the past 10 years buying dips, I warn you again, yes, we could get an oversold bounce. We could get an extremely sharp oversold bounce. Maybe we can quickly talk about that. I mean, for the S&P 500, I honestly have no doubt that we can get back up to 5,500, 5,400, like we can. The question is what happens after that, right? And this is why a lot of people lose so much money when volatility picks up and they lose a lot of their savings. That's why we're trying to help people to not do that and actually make money, hopefully on the trading side, is, it's the volatility that gets them. And I see a lot of people that have gone off the radar after being very active for the past 5-10 years because all of a sudden they've blown up their account, and we've been warning that for 12 months. So I would be very careful here. But I would also be opportunistic on a trading thing if I see something's very oversold. Again, we do that in the trade ops channel, so make sure you join us over there. We'll tell you when something gets extremely oversold and when there's new momentum. Well, what you can do is you can look at something called average true range, William. So it's something called average true range. Find it in the end indicators, and when you pull that up, I'll quickly show it to you. It'll tell you what the average true range for the past 14 days was. And so that's what you can see. So you can see it's about 127 points, but with the futures, it's actually even more. So that's what it is. So this is on a TradingView, for example. Jennifer wants to know, is COR a safer buy? I actually don't know what this company does, so I would have to brush up. Maybe we reconvene on this tomorrow. What I can tell you, Jennifer, and it's, again, I still see the buy the dip mentality out there, and again, as long as that's not over, I think this market won't materially bottom. Again, we'll get trading bounces, severe ones. What I can tell you is that correlation goes to like 1 when the market has a risk-off event like we have right now, meaning that pretty much everything goes down. I'm mostly long treasuries and gold, and so it's okay, right? I'm not like knocking it out of the park here this morning either, but the correlation still is positive for most things. So a stock is a stock. Now there's some stocks that are doing well, right? But it's very few and far between. So picking the 1 or 2 stock or the 10 stocks out of thousands of them that are going to go up in an environment like this is very, very difficult. So I personally would probably switch that mentality a little bit and just realize this is a risk-off event and really just, again, keep your trading and investing in 2 separate accounts. So I personally would not be going out and trying to buy something like COR right now. Again, that's just my view. So Make sure you join us over in Trade Ops. We're going to continue all this, and we'll do trades. It's going to be a busy morning. The way to get into Trade Ops is very simple. I'll quickly leave it here just so you guys have it, and then we will see you guys over there in just a few minutes. Also, we'll be back here tomorrow morning when we go live again with our morning call. So hopefully this is helpful. Very important for us as well, though, is that you give us a thumbs up like at number one, and number two, that you subscribe to the channel. That's very important also for you, so you actually are updated in real time when we go live. So that's important, and I'm going to quickly put this link in the chat so you can get started over there. Again, just join us, grab the link there, and we'll see you over in Trade Ops in just a few minutes. There you go. I put it into the link. So thanks for joining here, folks. Hope it was helpful. Thumbs up, subscribe to the channel. See you over in Trade Ops, and back here tomorrow morning at 9 o'clock. Take care.